Welcome to today's episode of Understanding GST and HST in Canada, where we simplify tax and accounting for small businesses. I'm Nicole, and today we have Kennie, a finance and tax professional, here to help small business owners understand how GST and HST works in Canada, and more importantly, how to avoid penalties. We'll cover essential topics, including taxable, exempt, and zero-rated supplies, input tax credits, and compliance tips. Let's start with the basics. What exactly is GST and HST, and how does it work in Canada?
Thank you for having me today. GST, first of all, is called Goods and Services Tax. It's a value-added tax that applies to most goods in Canada. GST generally is taxed 5% across Canada. HST is called the Harmonized Sales Tax. It's a combination of GST and PST. PST is called Provincial Sales Tax. HST varies by province. It could range between 13 to 15%, while some provinces charge no PST. All provinces charge GST. So, for example, in Ontario, businesses are expected to charge a 13% HST, while in Alberta, there is only a 5% GST because the province has no provincial sales tax in place.
Who is required to register for GST and HST, and when should they start charging it?
All businesses that provide taxable goods and services in Canada are expected to register for GST and HST. If you earn less than $30,000 in revenue within a year, you can voluntarily register for GST, HST if you want to benefit from input tax credits. However, once you start earning more than $30,000 in a calendar year, you must register for GST, HST, and start remitting to the CRA. Input tax credit allows you to claim your GST, HST paid on business-related expenses. Let me give you an example. For a self-employed consultant or corporation who reaches $30,000 in revenue within a year needs to register, start collecting HST and GST, and remit to the CRA.
Awesome. And there's often confusion between exempt and zero-rated supplies. Can you explain the difference?
Exempt supplies includes healthcare services, educational services, most financial services, residential rent, and childcare expenses. Businesses that provide exempt supplies do not charge HST or GST and cannot claim ITC on their business expenses. Zero rated, on the other hand, includes basic items like groceries, prescription drugs, and certain medical devices. While these businesses do not charge HST or GST on zero rated supplies, they can still claim ITCs on related expenses. It is important for businesses to understand the difference between zero-rated and exempt supplies. This will help them with their tax obligations and benefits.
Perfect. That's really good to know. So, what are input tax credits and how do they help businesses?
That's a very good question. ITCs allows businesses to claim or recover GST or HST paid on purchases and expenses related to their business activities. To claim ITC, businesses must be registered with the CRA for GST, HST, keep detailed receipt of tax paid, ensure expenses are related to taxable sales. For example, a graphic design firm who purchases a new software and pays HST can claim ITC, reducing the HST or GST owed to the CRA. Does that make sense?
Yes, definitely. Thank you so much. And what are some common GST and HST mistakes that small business owners make, and how can they avoid penalties?
This is a very interesting question because we see this every time. The first biggest mistake businesses make is not registering for GST and HST on time, once they exceed the $30,000 threshold. If you don't do that, by the time you register with the CRA, you may be charged interest and penalty for the period that, first of all, you didn't collect tax, and then for a period where you had collected tax and didn't remit on time. Secondly, is setting aside the funds collected as GST and HST. GST funds collected from your clients does not belong to you or the business. It needs to be remitted to the CRA. Other mistakes would be incorrect classification of sales, confusing exempt and zero-rated items, failing to maintain proper accurate records. I would advise that you have an accounting software that does all this for you. Keeping proper records on a spreadsheet would help. Missing filing deadlines. This is so important. You need to actually set a calendar reminder to always remind you to file on time.
Those are some great insights, Kenny. Any final tips for small business owners?
Yes. My first tip would be track revenue and expenses carefully. Do not wait for tax season to manage HST or GST. Get on board with platforms like this and hire accountants or tax professionals who would help you streamline your processes and make sure you're compliant with the CRA.
Awesome. Thank you so much. Kennie provides her services on Accountizer.ca, Canada's first AI-powered accounting services platform. So for more information, you can contact her through our platform. That's it for today. If you found this session valuable, please like, share, and subscribe for more small business tax tips. See you next time.